Hi everybody, it's FIBO Group and you are watching to the Market Watch review. Today's activity is continuing the strong equity market rally that was evident at the end last week. The majority of large Asian markets saw an increase in activity of at least 1%. Europe's Stoxx 600 has risen 0.8% after a rally of 2.6% before the weekend. After a soft opening, U.S. futures are now around 0.5%. The U.S. dollar is generally heavier than the major currencies. The Antipodeans are the laggards. The $1,850 mark is the limit for gold, which is still firm. As other sanctions have reduced the gold trade, the G7 ban on Russia's gold imports seems symbolic. August WTI is currently in the upper half of its pre-weekend range, but below $108.50. Asian Pacific market. China's zero-COVID policies and subsequent lockdowns were the second major shock of the year, following Russia's invasion in Ukraine. The risk of China's second quarter ending in a flurry of flare-ups or lockdowns is high. Beijing will soon announce its economic impact when it reports the second quarter GDP. The national data suggest an economy that is almost fully recovered, but the IMF only sees about half of it. The dollar consolidates in a narrow range against Japanese yen. It is within the range that was seen before the weekend. The Australian dollar is trading in quiet ranges as well as within the recent ranges. It traded mostly with a $0.6900 handle. The initial resistance is at $0.6975. Market of Europe. The swaps market projected the year-end rate at almost 1.22% just a few days after the ECB met on June 9, when it reiterated its intention of raising rates by 25 BP next monthly. It is now at 0.96%. The market is becoming more concerned about a possible recession. Preliminary composite PMI for June fell to 51.9 from 54.6. The International Energy Agency warned Europe to prepare for a total loss of Russian gas. Russia appears to be reducing the gas supplies it sends to Europe, almost as if it is quitting before it gets started. Although the euro is near its most recent highs, it remains below $1.06. Sterling rose to $1.2325, just above its previous week high. It is still within the range established on June 16. Market of America. The U.S. releases the preliminary estimate of May durable goods orders, pending home sales, and the Dallas Fed's June production survey. The second quarter GDP forecasts will be influenced most by the durable goods orders. Last week, the U.S. dollar settled slightly below CAD 1.29 at its lowest point. It has been following through selling, and it tested the CAD 1.2860 region, which is an important technical area. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.